I want you to stop for a moment and think about something very carefully before you make your next move with XRP. Right now, as you're reading the headlines and watching the charts, the price of XRP is sitting at $1.29. It is down nearly 47% from its all-time high of $3.65 that it hit in July 2025. The community is nervous, some people are panic selling, others are desperately searching for reassurance, and the mainstream crypto media is doing what it always does in moments like this, publishing contradictory headlines that leave you more confused than when you started. But here is what I need you to understand before anything else. The situation with XRP right now is not what most people think it is. And the data, the actual on-chain data, the historical seasonality data, the institutional flow data, is telling a story that is dramatically different from what you would conclude by just looking at the price on your screen. That story is what we are covering today. Every piece of it, every number, every signal, every risk, and every opportunity. Because you deserve the complete picture, not just the parts that fit a comfortable narrative. Let us start with the thing that nobody wants to admit openly, but the data makes impossible to ignore. XRP is in capitulation right now. That is not a casual observation. That is a specific technical condition measured by a metric called the Net Unrealized Profit and Loss Indicator, which is sourced directly from Glassnode, one of the most respected on-chain analytics platforms in the entire industry. And what that indicator is showing right now is that the majority of people who currently hold XRP are sitting on unrealized losses. They bought at higher prices, they are currently underwater. And many of them are making emotional decisions based on fear rather than rational decisions based on data. Now here is the critical thing about capitulation that most people do not understand. And this is where the story takes a turn that most of the panicking holders are completely missing. Capitulation is not the beginning of a downtrend. Historically, capitulation marks the late stage of a downtrend. It is the phase where the people with the weakest conviction, the ones who bought based on hype rather than fundamentals, finally give up and sell. And when those weak hands finish selling, the selling pressure that has been suppressing the price gradually exhausts itself. The market finds a floor, and recovery becomes possible in a way it was not while the panic selling was ongoing. Historically, XRP's capitulation phases have lasted approximately 1 month before reversing. The current capitulation stretch began at the start of February 2026. That means, if prior patterns repeat, and 12 years of historical data give us good reason to take patterns seriously, this capitulation phase could be ending in the first week of March, right now, this week. This is not wishful thinking, this is pattern recognition based on over a decade of price history, and the on-chain data is backing it up with a second confirming signal. The spent output profit ratio, called SOPR, is another Glassnode metric that tells us whether the coins being sold right now are being sold at a profit or at a loss. When SOPR is below 1, it means sellers are actively selling at a loss. When it rises above 1, it means the coins being sold are profitable, which historically coincides with the beginning of recovery phases. And right now, in late February and early March 2026, the SOPR is approaching the critical level of 1 again. A brief move above 1 occurred in mid-February, signaling temporary profitability before selling pressure reasserted itself. But the metric is climbing back toward that threshold once more. When SOPR holds above 1 sustainably, even for a few days, it signals that the composition of selling has changed. The panicked sellers who were selling at losses have largely exhausted their supply. What remains are holders who are selling into profit, which is a structurally healthier market dynamic. And that shift often marks the beginning of genuine price stabilization and recovery. So you have two independent on-chain metrics from the most credible data source in the industry, both pointing toward the same conclusion. The capitulation phase that began in February may be ending right now in early March. The selling pressure that has held XRP below key resistance levels since January may be approaching exhaustion. But there is a third data point that I think is the most powerful of all, and it is one that most people completely overlook when they are in the middle of a painful price decline: seasonality. Over the past 12 years, 12 full years of XRP price history, March has delivered an average return of 18%. 18%. That makes March statistically the strongest month for XRP in the entire first quarter of the year. Not February, not January, March. Now, before you get too excited, let me be clear about what this means and what it does not mean. Past performance is not a guarantee of future results. Historical patterns can and do break when external conditions are sufficiently different from the historical norm. And right now, there are genuine external risks that could delay or reduce the seasonal bullish tendency, escalating geopolitical tensions involving the United States and Israel, broader financial market instability, and a macro environment that has pushed Bitcoin toward its 5th consecutive monthly loss, which would be its worst losing streak since 2018. These are real risks. They deserve honest acknowledgement. Any analysis that pretends they do not exist is not doing you a service. But here's the thing. Even with those risks on the table, 18% average returns in March over 12 years of data is not a coincidence. It is a pattern with statistical weight. And when you combine it with two independent on-chain signals, both pointing toward the end of a capitulation phase, the convergence of evidence starts to become meaningful. Now let us talk about the price levels that actually matter. Because right now, everything in the XRP story revolves around one number, $1.27. That is the critical support level that XRP must hold to keep the bullish recovery scenario alive. It aligns with the 23.6% Fibonacci retracement level, which in technical analysis is often referred to as the bear market support floor. As long as XRP trades above $1.27, the foundation for a potential recovery remains structurally intact. At the time this analysis was written, XRP was trading at $1.29. It is holding above that critical floor by just 2 cents. 2 cents. That is how thin the margin is right now. That is how important the next few days and weeks are for the direction of the XRP price story in March. If XRP holds this level and the capitulation exhausts itself as the on-chain data suggests it might, the next target becomes the descending trend line that has been active since January. A meaningful push above that trend line would be the first real technical evidence that the downtrend is losing its grip. And above that, the key confirmation level sits at $1.51, the 61.8% Fibonacci retracement level. A close above $1.51 would represent what technical analysts call a structural shift, and the kind of price action that typically brings buyers back to the market in volume. Beyond that resistance, on-chain data from Glassnode's cost basis distribution heat map shows limited resistance until the $1.76 to $1.80 range. That range matters because approximately 1.85 billion XRP tokens were accumulated in that zone at a total cost of nearly $2.83 billion. The holders who bought there are currently underwater, and many of them will sell to break even when price returns to their entry point. That creates what is called technical resistance, a natural ceiling that price will need to work through, not because of any fundamental rejection of XRP's value, but simply because a large number of people want their money back. But here's the critical piece of context that makes those resistance levels feel less intimidating than they sound. AI-powered price analysis from ChatGPT, published just hours ago by Finbold, projects XRP could trade between $1.60 and $1.85 by March 31st, 2026. That range sits almost perfectly within and just above that resistance zone, implying the analysts see enough buying pressure to work through the overhead supply rather than being permanently blocked by it. The AI model identified support near $1.30 to $1.35, right where XRP is trading now, and resistance between $1.50 and $1.60, consistent with the Fibonacci levels the on-chain data highlights. And this is not just algorithmic speculation sitting in isolation. Just yesterday, March 1st, 2026, XRP showed real signs of life. The price surged above $1.40 with a 4.56% daily gain. Trading volume rose over 68%, which is critical because volume confirms whether price moves have real buying power behind them or whether they are low conviction noise. A 68% increase in volume accompanying a price surge is not noise. That is buyers showing up with real capital. And the price held firm above $1.40, extending upward momentum into the first trading day of March. The altcoin season index also increased by over 20% in a single week, signaling genuine capital rotation from Bitcoin into altcoins. When capital rotates into altcoins, and XRP specifically is showing volume-confirmed price gains, and is trading right at the end of a historically timed capitulation phase during its statistically strongest calendar month. You have a confluence of signals that serious investors pay attention to. There is also an institutional dimension to this story that deserves your attention. XRP spot ETFs recorded net inflows of approximately $2.21 million in the most recent week, raising total XRP holdings in ETF products to roughly $983 million as of February 27th. Those inflows continued without interruption through the price decline, meaning institutional buyers were not spooked by the dip. They were buying it, quietly, methodically. The way institutions always move when they see value that retail investors are too emotional to see clearly. And JP Morgan Chase, one of the most influential financial institutions in the world, stated publicly this week that the Clarity Act could unlock additional institutional capital for crypto, and that clearer regulatory rules would help affirm crypto's role in the broader financial system in the second half of 2026. JP Morgan does not make statements like that casually. When JP Morgan comments positively on regulatory clarity for XRP, it is sending a signal to every institutional compliance team that is currently sitting on the sidelines waiting for permission to allocate. Now, let me give you the honest, complete picture of the downside risk, because ignoring it would be irresponsible. If XRP fails to hold $1.27, the bullish outlook changes significantly. A breakdown below the bear market support floor invalidates the Fibonacci structure that the recovery scenario depends on. In that case, the next meaningful support sits at $1.11. That is where price would likely find its next floor. It is not catastrophic. $1.11 is still well above zero. But it would extend the pain, push the timeline for recovery further out, and require XRP to rebuild its technical foundation from a lower base before any meaningful move toward the $1.51 target and beyond becomes realistic. The macro environment is the biggest wildcard. Bitcoin's performance matters enormously for XRP. When Bitcoin falls, capital leaves the entire crypto ecosystem, and even fundamentally strong altcoins get pulled down with it. Bitcoin sitting on pace for its 5th consecutive monthly loss is a headwind that XRP cannot completely insulate itself from, regardless of how favorable the XRP-specific on-chain data looks. If geopolitical tensions escalate further, or if macroeconomic instability intensifies, the seasonal 18% average return that March history promises could be delayed or reduced. Continued sideways consolidation, where price neither breaks down below $1.27 nor recovers above $1.51, is the third scenario that nobody talks about because it is the least dramatic but arguably the most likely in the short term. Markets can grind sideways for weeks while the macro environment resolves before making their directional move. If you are waiting for a dramatic V-shaped recovery to happen overnight, you may be frustrated, even if the ultimate direction is correct. Here is what all of this means practically for how you should be thinking about your XRP position right now. The data does not tell you to panic. The capitulation signal, the SOPR approaching 1, the 18% seasonal average, the volume confirmed price action on March 1st, the institutional ETF inflows continuing through the dip. None of these things point toward a collapse. They point toward a market that is finishing a painful but historically normal downward correction and building the conditions for recovery. But the data also does not tell you to be reckless. $1.27 is the line in the sand. Watch it. If that level holds in the first week of March and SOPR confirms above 1 with volume, the evidence for a recovery attempt becomes substantially stronger. If that level breaks, step back and reassess, rather than adding to a position that has lost its technical foundation. The smart approach right now is the same approach it always is, when on-chain data and technical analysis are pointing in the same direction as historical seasonality, but macro uncertainty remains elevated. Size your position honestly based on what you can afford to hold through continued volatility without making emotional decisions. Watch the specific data points, SOPR, the $1.27 support, volume on any recovery attempts, rather than reacting to price alone. And understand that the difference between investors who compound wealth through cycles like this and investors who give it away is almost never the quality of their initial thesis. It is the discipline of their execution when the market is uncomfortable. March presents both risk and opportunity for XRP. That is not a hedge or a cop-out. That is the most accurate description of a situation where the historical signals are clearly bullish, but the macro environment creates genuine uncertainty that responsible analysis cannot dismiss. The capitulation is near its end. The seasonality is supportive. The institutions are still buying. The technical floor is holding by 2 cents, and March begins today. Pay attention to what happens next, because if the on-chain data is right, and 12 years of history says it usually is, the most uncomfortable week of the XRP correction may already be behind you. If this analysis gave you a clearer and more honest picture of what is actually happening with XRP right now, hit the like button so more holders can access real data-driven analysis rather than hype and panic. Subscribe to stay updated as the March price action develops. We will be watching every key level, every on-chain signal, and every institutional flow number in real time. And drop your honest thoughts in the comments. Are you holding through this, or have you already sold? Because that conversation, the real one, not the performative one, is where the most valuable insights come from. Stay data-driven, stay disciplined, and never let fear make decisions that should be made by analysis.